Hi, welcome back. I'm sorry for the considerable gap between the videos that I have uploaded. It's because of the internet issues I'm having right now. The same reason I cannot have a video conference. Because of this internet issues, we're going to cut the discussion short. For this particular video discussion, we'll have home office and branch accounting at build price. We're already done with the cost, then we'll have at build price. So basically, they're just the same, except for just one thing that home office adds a certain markup when they send the inventories or the shipments to the branch. So to further explain, let's continue. Again, for this particular discussion, we'll only tackle shipments to branch at build price. Later, we'll have inter-branch transfer of merchandise and inter-branch transfer of cash. So shipments to branch at build price. So the home office may send the shipments to the branch with a markup. Meaning, for example, uh, you have the home office inventory costing 100 pesos per unit. When they ship it out to the branch, they will add a markup of, let's say, 50 pesos. So the branch will receive it at 150. And so the branch will take it up in its inventory at 150. Most of the time, the brand does not know how much the markup is, and only the home office know. Take note that the transfer merchandise from a home office to the branch is not considered a sale because the home office and the branch is just treated as one entity. This is not a sale. This is merely a transfer of merchandise. Okay, so that markup on the shipment sent by the home office to the branch is not yet considered realized. So when will it be realized? It will be realized when the inventory from the branch will be sold to external customers. Only then that the certain markup made by the home office to the shipments are realized. As I have said, home office recognizes its income when the merchandise are sold by the branch to the external customers. So to better illustrate this one, let me just show you this. For example, you have the home office, you have the branch, and then you have the external customers. Okay, so the home office sends out 5 units of inventories. The cost is 100. There is the markup of 20 pesos. Okay, normally the problem would say 20% of cost or 20% above cost. So it will be worded as home office ships inventories to the branch 20% above cost, or home office ships inventories to the branch billed at 120% of cost. So that's 100 times 100 1.2, which will give you 120. So in this case, the okay, the cost of the merchandise, sorry, the cost of the merchandise is 100. The the markup is 20, and the bill price is 120. Okay. So the home office will journalize debit investment in branch 600, credit shipments to branch 500, and credit allowance for markup. So the difference between cost and bill price is that there exists the allowance for markup account, or in some references this is called allowance for overvaluation. Yeah. Okay. Um, so if as you notice, the shipments to branch is credited at cost 1, 2, 3, 4, 5, and then for allowance for markup you have 100. Now the branch, upon receiving the shipments, it will debit shipments from home office. Take note that 600 and credit home office 600. So it will take up the inventory as on its bill price at 600. Okay. It will not include any other account such as allowance for markup. Only the home office knows. Now, when the branch sells it to external customers, for example, the branch sold 2 units. There were five. Nagbaligya siya 2 units. So of course, the branch, because it is still a business, it will still add another markup for it to earn income. So it treated 120 the build price as its cost because of course you does not know about the markup made with the home office. So you have 120 as its cost and then 30 as the markup. All in all, you have the selling price at 150. Okay, 150. So journal entry would be debit A or credit sales 300. So that's 150 and 150. Now, the branch will record in its ending inventory 360 because you have 120, 120, 120, adding up to 360. The other two was already sold to external customers. So how will it affect our financial statements? Okay. Or what is then the true net income of the branch? So first, let's answer the question, how much was the income recognized by the branch? As we remember, the branch had the sales of 300, there were shipments of 600, the ending inventory was 360, so you have a cost of goods sold of 240. So less sales minus cost of goods sold, you have a gross profit of 60. But is that the true income of the branch? If you remember, this cost of goods sold, the cost of the goods that were sold, is not the actual cost of those inventories. Those costs already includes a markup, which was made by the home office. So let's compute what is the true income of the branch. If you will remember that the true cost of each unit is 100 and not 120. So true net income, you have sales, the cost, the shipment, which is actually 500 because there were 5 units, 100 cost, 100 pesos per unit, so 500. And then there were 3 units remaining, so 100 times 3, you have 300. So 500 minus 300, you have the cost of goods sold amounting to 200. So sales, 300 minus 200 cost of goods sold, you have a gross profit of 100. So if you'll notice, the true branch income is higher than the gross profit recognized by the branch because the gross profit recorded by the branch does not acknowledge yet the allowance for markup that was realized. So another way of computing this one, and we will have a separate videos on how to compute for the true branch net income or the branch's true branch net income. Okay, and we'll have different cases for it. So just another way of computing the branch income. So remember we have 60 as our income, and out of 5 units, 2 units were sold. But as we remember, 120 is not the true cost. The true cost is only 100. That means the remaining 20 here are actually realized mark. So 20 plus 30, 20 plus 30, that adds up to 100, which is our true branch net income. Okay. Now, in the combined financial statements, so if you'll remember, there were remaining inventories presented in the branch financial statements, which amounts to 360. Because there were 3 units at build price 120, so 120 times 3, you have 360. Question is, what would be the amount that will be included in the combined financial statement? Naturally, for the separate financial statement of the branch, he will put 360 because he does not know how much the markup is. So he will take the build price as the cost of the inventory. But for the combined financial statement, the markup should be taken out. Because in presenting the financial statement, the inventory should be presented at lower of cost or NRV. And the true cost is not 120. Instead, that's 100 per unit. So there were 3 units. That's why you have 360. You take out the markup, 20 per unit, 60. You get the ending inventory at cost 300. Okay. So we'll have a separate discussion for ways in computing the true net income and ways in converting build price to cost or how do we interpret commonly used phrases in the problem. So for now, since we're as much as possible we're making the discussion short, that will be it for now. Thank you.